Okay, let's rock and roll. Aussie dollar. Now, I'm not sure how many of you saw the trade idea that my marketing team sent out earlier this week. I mentioned the Aussie dollar. Okay, now why did I choose the Aussie dollar? Simply because if you look at the weekly chart, right? Very, very nice resistance around the 7750. Okay, you can see that it has not been broken for the whole of 2016. Every time it touches, it goes right down, touches, goes right down, touches, goes right down. Okay, so this is a big fat resistance here. Now the other thing I like is this was a nice trend line, okay, and it's consolidating for the whole 2016. And what he has done is that it's consolidating, it's getting tighter, tighter, tighter till right now you can safely say that we are the apex of this little ascending triangle. And once we're at the apex, something's got to give, right? Either we break upwards or break downwards. Okay, so this is a weekly chart for you, consolidating, but it seems that it's breaking downwards. It seems that it's breaking downwards. Some of you might say that, hey, Nabil, I mean, your trend line is not looking that accurate, isn't it? Your trend line can be drawn like that as well, and you can see that this is support. What do you guys think? Do you think this is possible? Do you guys think this trend line is better or the previous trend line is better? What do you guys think? Last one is better. About the same. Okay, now subjective. Exactly, Raju. It is subjective, but you got to understand that trend lines are subjective. Do not take a trend line as a hard and a black and white level. Okay, it is subjective. It is, especially on a higher time frame like a weekly chart. Yep. So for me, it doesn't really matter how I draw it. Okay, I can even say that to convince myself that this is going to break downwards, I can even draw it like that. And say that, hey, weekly candle close below trend line. Nice, key support broken, it's coming down. Okay, so there's no point adjusting trend line too much to convince yourself. It doesn't work like that. It is discretionary, it is subjective. Okay, what trend line and chart patterns do is that it gives you a gauge. But do not take it as a hard and fast thing. I would rather use horizontal levels and key number levels as a better gauge. Trend lines is just a guide. Okay, but what I like about the short setup is that if you look at the weekly candle, right? Now, so those of you who are familiar with candlestick pattern, this is what I call a bearish engulfing candle, meaning that the candle actually engulfs the whole previous bullish candle. So this is a bearish engulfing candle. Okay, and if you notice that it's a bearish engulfing candle at a key resistance at 7750. So on the weekly chart, it gives me a first heads up that, hey, the bears might be in charge. Okay, the bears might be in charge. Going to the daily chart, okay, daily chart downtrend not that obvious yet. You look at the moving averages, it's still pretty sideways, but I want you to bring your attention to this level here around the 75.80 to 76. All right, you can see that this is quite a key level, all right, based on the support and resistance and also the trend line area. So what I'm looking out for is somewhere here. In fact, we have touched 75.80 today. Okay, so I'm all eyes in this area here, anywhere between 75.80 to 76, to see whether the shorter term charts is going to turn around. Because the shorter term charts start turning around, I'm more than happy to line up shorts and trade it at least back to the previous support or maybe down to 75 even. Okay, but what I like is that the daily chart is showing a first sign of a possible, what's this called? This one. What's this swing called? Okay, the daily chart, exactly, Raju. Thanks for that. So the daily chart is showing a possible sign of a lower low. And lower low is a signal of a start of a downtrend. Okay, so lower low, I short at a lower high. So you see where we are. So my lower high, I'm plotting anywhere between 75.80 to 76. Lower high, somewhere here. So all I'm waiting for right now is I'm waiting for the short-term charts to give me the green light. Okay, so let's go to short-term charts. See what's happening over there. So the 4-hour chart, you can see the 4-hour chart is quite bottomish. So what was the market just now? I can't remember. I covered something just now. Oh my god, memory is bad. What's the Hang Seng? Okay, never mind. But the 4-hour chart, you can see that it's very bottomish. You can see that this 75.20 area doesn't want to break and it's pushing higher. So this is the area I'm looking at, 75.80. So the 4-hour chart is still trying to push higher. The 4-hour chart is still in a downtrend. Yeah? 50-minute chart's very sideways. And 1-hour chart also sideways. So for me, the short-term charts is still moving sideways, all right? But once I see it is hit my area, 75.80. Okay, this is a key area. Anywhere between 75.80 to 76 cents. I'm actually quite happy. So this is the key area here. So what I'm looking out for is basically I'm waiting for a short-term chart at 15 minutes to show signs that it wants to come down. Right now, is this coming down to you? What do you guys think? 15-minute chart. Is this uptrend, downtrend, or sideways? Exactly. Sideways. In fact, you can take out your trend line and start drawing all these little patterns here and there. Okay? So what I'm going to do is that I want to show me that it's coming down. Maybe a break of the 75.50 or so. Then I'm happy to jump in. Alright, in the past, my weakness that I always get too anxious, or what they call it kanchong, right? And I always try to jump in and take a shot and always get burned. You know what's the most frustrating thing? If you're always trying to be too gung-ho and too anxious, right? Sometimes, right, based on your trade plan, you can take many shots. You can take shots here, you can take shots here, you can take many shots, and without knowing it, you have lost 2 to 3 trades in a row already. And there's no point losing 2 to 3 trades in a row. So that means that maybe you're short here, lost money, short here, lost money, and then finally when it comes to this area, then it comes down. So this was your initial trade plan, right? To short based on daily chart. Okay, but a lot of times you get mucked around by this 15-minute chart, and then you lost so much money that when the real signal to short comes in, you're too fearful to pull the trigger, and the thing drops. Oh my God, that is the most frustrating thing ever. Any of you experienced this before? It is so frustrating. Many times, yeah. Exactly, right? It's so frustrating because your analysis is spot on, but your stupid psychology is causing you to trade. And that's why there's a big difference between being a trader and being an analyst. Okay, like I mentioned before, any of you who are really good at analyzing study price action support resistance, you can do what I do right now. It's not rocket science, but it's the psychology that's tough. So right now, I'm learning to be patient. 15-minute chart still consolidating. Just be patient. What makes you think that it won't move higher to 76 first, then dropping? Possible, right? Why not? 3, on this 15-minute chart, if you get 75.80, it's broken the upper line. Yeah, 75.80 is here. But don't forget the key level that I'm looking out for, as in my reference point, is the daily chart, right? So the daily chart is anywhere between the 75.80 to 60 cents area. Okay, so I'm being very patient and just waiting. All right, and always look out for Aussie news. Yeah, Aussie news is normally in Singapore morning time because again, news can change the entire dynamics of it. Okay, so always look out for Aussie news in the morning. All right, so that's one of the trade plan I have that you have. Can look Aussie dollar. Other trade idea that I'm looking out for is Euro Yen. Okay, because if you look at the daily chart, the Euro Yen, look at that. What do you guys think? Is this nice? I like it. I love it. Because you look at the daily chart, if you look at all these swings, higher low, yes, this is the election candle, still another higher low somewhere here, and it has made a new higher high. Okay, the previous high was this swing. So there's a series of higher lows, and the higher lows is causing the momentum to push higher, higher, and higher. And you can see that this was the previous swing, and this is a new higher high. Okay, so the direction is definitely to the upside. All right, and if you go to the 4-hour chart, so daily is bullish, I'm bullish. If you go to 4-hour chart, all right, looking nice, the uptrend as well, riding the momentum. Let's see, okay, go to the 1-hour chart. Nice, a setup might be coming up. Just pay attention tonight. Look at this level here, 116.45 to 50. Okay, so this is a very nice breakout. This is a very nice area that I want to look up for. Yeah, okay, you have a nice support trend line as well, like that. Beautiful. Pay attention. It might happen tonight. It might happen tomorrow morning. I don't know. But this area here, 116.40 to 116.50. This area might bounce back up, and if everything turns out well, it might react from the 116.40, and then it might move upwards from here. Okay, if you look at the daily chart. But looking at the daily chart, weekly chart, it is bullish, and it might go to the next level of resistance around the, what level is this? 117. It's not really touched 117 yet. So next level of resistance, it might go to 117. That's almost about 140 pips away. Okay, possible, but this is quite a nice looking uptrend chart. All right, so daily is up, 4 hours up, 1 hour is up, looking good to the upside. Okay, so just pay attention to that one. So just pay attention to this. Okay, I think it's a decent trade because the stop loss can be below this previous swing here. Because if this whole uptrend if this whole green series of uptrend candles is reversed, right, and this trend line is broken, means that the uptrend, this might be a false breakout. So this is quite a decent risk to reward trade. Okay, you can target close to 117. Your stop loss can be below the trend line around here. All right, that's Euro Yen. Any other FX pairs you want me to cover? So this Aussie dollar and Euro dollar, this is Euro Yen and Aussie dollar. These are two FX pairs that I thought looked really nice for the week. Dollar Swiss. Okay, let's go to dollar Swiss. Okay, dollar Swiss looks really nice and bullish. But it's at resistance. The resistance is near parity, $1. Okay, let's go to weekly chart now. Dollar Swiss, yeah, it's consolidating to me, but the $1 level is just right in your face right there. Okay, parity is a big thing. Look at how many times you try to break above parity and just comes back down. Remember the Swiss intervention? This was, oh my goodness, this was scary, man. 2015. But yeah, weekly is consolidating to me. Daily chart. Okay, this was a nice reversal to the upside. Okay, but there's no trend to me. This is just a big reversal from the election day. Yeah, big reversal. If you go to the 4-hour chart, yep, 4-hour chart looks bullish. Okay, so this is the things, Yingmei, sorry. So if you look at dollar Swiss, right, you can rode the 4-hour trend to the upside, but right now there's just not much meat left. $1 is a very, very key level. Okay, the only trade plan that I can think of is looking to short at parity. It will be a counter trend kind of trade, not my cup of tea, but pay attention. $1 is a key level. And you see what happened every time when you try to break $1, it comes down. Okay, so just pay attention to this $1 level. Maybe it's a counter trend trade, so be very, very careful. You're trading counter trend. If you're wrong, get out. Okay, so the closest trade plan I can think of in May right now is near the parity level. Take a short-term kind of counter trend trade. If not, if you're bullish, there's nothing much you can do right now. It's just too close to resistance. Okay. Okay, so I'm gonna do gold right now. All right, so looking at gold, let's start the weekly chart. My God, gold caught many people by surprise. Who would have thought? Okay, I was look at this level. This level of gold is very key, 1300 to 1310. All right, this whole reversal was caused by the election, and it did break above 1300, 1310, which let me think that gold will be bullish for the rest of the year. But look at what happened. The whole thing just crashed, and now we're back to support. Crazy, isn't it? But that's what the markets do. It is as random as it is. Let's see. Okay, so looking at level, this whole weekly chart for me for gold is consolidating. Okay, it's resting at support near the 1210 level. Yep. If you look at the daily chart is definitely in the downtrend. But okay, be very careful at this level here, near the 1200. Okay, the intraday kind of trade plan, I would say that it's still bearish. It's still bearish. So what you want to look out for is the market might make a push higher, but this 1240, 1250 is key resistance, and then it might come down to 1200. This is a trade plan I'm looking for. So weekly is consolidating, daily is bearish, 4-hour is bearish as well. Okay, but if you're looking for intraday kind of setup, I'm looking more to short side. Letting it retrace, maybe close to back to this level here, around the 1240 to 1250, before it comes down again. So you said there's bearish divergence on the daily, is it? Let me check it. No, this is bullish divergence actually. This is bullish. Yeah, sorry, bullish divergence. Correct. You're right, Sri. You're right, Sri. That means that on the daily chart, yes. That means based on this trade plan that I have, right? Yes, possible that the daily chart might start going up from here because of this bullish divergence. So even though I didn't see the bullish divergence, thank you for pointing that out. Even though I didn't see the bullish divergence compared to MACD, if I would look for a lower high and a resistance to short, which is around the 1240 and 1240, 1250 area before taking it down back to the key support around the 1200. Okay, Sri? Now, just bear with me for another 10 minutes or so because I wanted to cover something that I thought is quite close to my heart. Because I've been trading for almost 6-7 years, right? And I cover a lot of technical analysis, okay, which is why next week, 24th, I'll have a theory class on price action and support and resistance and how to plan trades. So look out for it. It's on 24th of November, Thursday, 7 to 8:30. But today, I just want to cover something that is very important in trading. Okay, it's very important in trading. Now, I'm not sure how many of you saw this, but basically this was in July, I think. I was featured in the Straits Times talking about Zen, the art of trading, and basically they were asking me about how I combine trading and meditation. Okay, so one way for me to cope or to manage my psychology is I do a lot of mindfulness practice, a lot of centering, a lot of meditation, because trading 80% to me is psychology. Okay, all these things I cover is technical analysis. Yes, it helps you to give a structure to the market. It helps you to give a strategy to the market so that you know how to approach it. But the psychology is something that you can't learn overnight. Okay, unless you were brought up in an environment of traders, or maybe your parents are traders. But a lot of things that we grew up in, the mindset, you know, of being fearful of losing money, of being so protective of money, or just being, you know, just being attached to money. all this mindset that we grew up, especially for me, that all this mindset I grew up in is actually it's not good for trading. Okay, so I make sure that I use meditation and think of mindfulness to center myself before I go trading. So this article, there's this link that you can go to. Sorry, I like this website. It's called the Art of Zenshin. If you guys are into samurai ninja stuff and Japanese, the Japan folklore, Art of Zenshin is very interesting. It's basically learning the art of attention and focus. And I just want to bring your attention to this quote here by saying that, you see, one should approach all activities and situations with the same sincerity, same intensity, and same awareness. And I like this. Okay, basically the summary of this whole article is, if we put the intensity and focus and sincerity into the process, so the process is very important. If we put the sincerity and the focus into the process, like where we place our feet, where we hold the bow, how we breathe during the release of the arrow, then hitting the bull's eye is simply a side effect. I love this sentence. This sentence summarizes the whole article because it's the process that's more important. And for trading, right, the process of how you plan your trade, how you analyze the market, the consistency, the strategy, okay, how you manage your psychology. The process is more important than just thinking of the results. Easier said than done. Trust me, easier said than done. Okay, because a lot of time, why do we trade? Because we want to make more money, correct? Everybody wants to make more money. And the key thing is not to pay so much attention on the results, because losing money is painful, but it's part of trading. Okay, but losing money is painful, is even more painful when you are doing stupid things in markets. It means you are not disciplined, you are going against your trade plan, and you're not following a strategy. It happens to every one of us. Even the best traders can have a losing streak. If you lose money based on the market, let's say you follow a strategy, but the particular trade setup didn't work out, it's not as painful as when you lose money because you're doing something stupid. Any of you can relate to that? Yeah. So this Art of Zenshin thing is a really good article. Yeah, put it under the chat so that you guys can have a look. And basically what I want to cover today is I call it the disease of the 21st century, whereby a lot of us are caught in overthinking. And for traders, I call it overtrading. Okay, overtrading is a really big thing in a lot of traders as well. So what is overtrading? Okay, any of you have know what's overtrading? So overtrading to me, right, is basically taking any trade outside your trading plan, okay, or taking any trade which cause you to go over your normal risk limits. All right, so these two options again. So overtrading is taking any one trade outside your trading plan or taking any trade which causes you to go over your risk, your normal risk limit. So for me, that's overtrading. And when you do overtrading, right, what you tend to do is that you get very anxious. Okay, and that's where your mind goes into, what I call that, it goes into anxiety mode, and it's very dangerous. So you see this picture there, this guy in his computer with a wait, what's this called? I can't remember. I mean, what they do, what's it called? IBU or something. But I mean, basically, look at his face, look at how he holds the mouse. Any of you can relate to that. I know I can relate to that. And especially whereby you have the drip. Yes, thank you, Sunil. IV, exactly, yes. So I'm sure a lot of you can relate to it. I can relate to it because sometimes when you are over trading, you just want to get back in the markets, and you tend to do things like doubling up on your lot size, entering, taking revenge trades. All this on theory, on paper, is easy to say. I can say right now as well, but I might do it the next minute. Okay, because psychology is something that is very, very tricky, and sometimes it's your unconscious behavior that will cause you to make a big mistake that will blow your account. And it's quite scary because I experienced, in my own trading experience, I experienced myself whereby there are times whereby I hit this unconscious state whereby I get so anxious to trade, and I do a lot of funny things in the markets. Okay, I do a lot of funny things in the market, and that's what get me into trouble. Okay, and in this unconscious state whereby you need to reflect and try to tone it down and be aware of it. So as much as analysis and technical analysis and fundamental analysis is important in trading, for those of you who aspire to be successful traders, whether full-time or part-time, you need to really, really work on your psychology. Whether you attend a course or you do your journal or whatever, okay, quickly work on psychology, because the psychology takes a long time to condition. Okay, and it's very, very important that you need to fix that. Okay, so one way that I do to make sure that I'm always in the right state of mind before I enter any trade or before I go into a trading session is basically, okay, I do a lot of centering. Okay, and basically the question you ask yourself, how disciplined is your mind? How disciplined is your mind? And sometimes if you are trading alone, right, the good thing about having a mentor when you're trading or having somebody is that it can point out your blind spots. A lot of times as traders, we do not know what's our blind spot, and we do not know how disciplined our mind is. Okay, that's why journaling is very important. So sometimes I show you like screenshots of my PowerPoint, of screenshots of my trades, right? That's why I use journaling. And sometimes when I look back and see some of the trades I take, and I was thinking to myself, like, why did I get into such a trade? It doesn't look, the setup doesn't look good at all. So this is where you reflect, and then you go back in time and try to think about what was your state of mind when you entered the trade. Okay, each of us are built very differently in terms of psychology. There's so many bad habits. Some of us can be more fearful. Some of us can be too greedy. Some of us always like to move stop loss. Many, many little things. But it's all these little things that you are not aware of that can hinder your effort on becoming a good trader. I've seen a lot of traders going one big circle, one big merry-go-round for 5, 10 years. All right, wanting to find the holy grail all the time. Okay, but the key thing is you need to start focusing on psychology as soon as possible. Okay, I cannot emphasize that enough. So one way, if you want to follow me or you want to learn what I do, is I do a lot of centering. Centering is basically to engage my senses. Okay, some of you, when I share this with some clients or some traders, they think this is very abstract. Okay, this is something that is very far-fetched. It's not. It's absolutely not. This is very, very close to trading. Okay, and basically it's to stop using your brain to trade. Okay, but get in touch with your senses so that you can stop. You can bring your anxiety down. So your mind, right? Just imagine your mind like a monkey that keeps talking. It keeps yakking away, and it will have a lot of questions in your head. Like, you see, what am I doing? Am I doing the right job? Am I good enough? You know, what do people think of me? Why do I bother? Or in terms of a trader, okay, what's the market doing right now? Am I making enough money? Do I have a right strategy? Things like that. So all these questions is the monkey in your head that keeps making you think. Now, if that monkey in your head keeps talking, and basically your head is noisy and you're anxious, when you start trading, right, chances are you will make a lot of mistakes because you're very anxious. Instead of waiting for the markets to come to you, you try to chase the market. And trading from the state of mind is very dangerous. So one way that you can do is basically engage your senses. Engage your senses, meaning your 5 senses: your touch, smell, visual, hearing, and what's the last one? Touch, and feel. So basically, these are your 5 senses that you need to engage so that you can slow down the monkey in your head. Now, can you stop the monkey from talking? You can't. Okay, because if you stop the monkey from talking, basically you're brain dead. Okay, so all of us have this monkey that keeps talking. So the whole point of centering, or some call it meditation, is to slow down that monkey in your head so that before any trading session, you're very clear, you follow your trade plan, you stick to what you do best, which is your strategy. Okay, so what you can do is before every trading session, okay, you can even try this now. You can just make sure your feet is planted to the ground, and then you can just close your eyes and just focus on your breathing. So what you can do is when you breathe in, count to 3,000, like 1,000, 2,000, 3,000, and when you breathe out, you count to 4,000. So the whole trick is to lower down your anxiety level. So when you breathe in 3,000, when you breathe out very slowly, four counts, and basically do it 3 times. So breathe in, breathe out, do it as much as you can till you find your anxiety level go down, then you start trading. And whenever you catch yourself being anxious, okay, go back to centering. And basically the centering can really help because it helps you stay focused, helps you stay clear, helps you avoid doing a lot of mistakes and without knowing it sometimes. The scary thing is doing it without knowing, and it will definitely help you be a better trader. So the whole point is to be consistent and to make sure that you're very clear. Okay, you cannot trade when you're anxious. Okay, you really cannot trade anxious because it will really do more harm than good. Okay, so this is something that is close to my heart because I really believe in it. I thought I want to share my webinar session besides talking about live markets every week. Give it a try. So just before you start trading, in fact tonight, if you plan to trade, just close your eyes, focus on breathing. When I say focus on breathing, means bring all your attention to your breathing. So you breathe in and then breathe out, breathe in, breathe out. Do it about 4 or 5 times, and then carry on. And when you feel yourself getting anxious, keep doing it again. Okay, so just a little sharing of my mindfulness and how I incorporate it in trading. It is a big part of trading to me. Okay, it's something that I really want to incorporate in the future, and do it a bit more. And again, centering and mindfulness and meditation is not a one-off thing. You don't do it in one day. You can do like centering for like, or meditation for like an hour or 5 hours in one day, and don't do it for the rest of the day. It doesn't work like that. What you want is consistency. So I'd rather you do it like just 10 minutes every day and build the consistency so that you will lower your monkey in your head. You will slow it down, and then you can think much clearer. Okay, so just wanted to share with you. So try it out, and thank you for staying. I know it's about 8:15. Try it out and give me your feedback and what you think in our next session. So again, my next webinar is on the 24th of November. Thursday is from 7 to 8:30 p.m. Oh yeah, I need to share the link, right? So sorry about that. Let me see whether I have it. You guys got any questions? I feel that I feel that in Singapore, right, there's a lot of educators teaching strategies, but there really lack of people teaching psychology. And I think that's the most important thing with trading, really. Very, very important. Let me just see if I can paste it here. Hold on, yeah. Okay, that's the link about the Art of Zenshin. Yep. So yeah. So just think about it. Okay. If you want some tips on how to do centering and mindfulness, feel free to email me. I can show you some websites or what I do. But again, keep it consistent. Okay. And then slowly you'll find your brain frequency slow down and you can think much clearer. It will not only help your trading, it will help in every aspect of life because you're always coming from a mindfulness from a mindful approach. Okay. If not, again, thank you so much for coming by for tonight's session. Hopefully I'll see you next Thursday, and yeah, don't forget to plan the trade and trade the plan. Okay, have a good night, everyone. Take care. Thank you.